Welcome to the weekly intermarket analysis video update, where we look outside of just the S&P 500 at other indexes, other sectors, other markets to see if we're getting any clues as to what's ultimately happening with the S&P 500. This is being prepared for Monday, May 5th. The areas that will be covered, first of all, looks at the historical and forward-looking valuation of the S&P. Then we do a pretty extensive study of growth versus value. We want growth to outperform value when the market's going up. If value is outperforming growth, that often means there's a problem in the market. Then we'll look at inflation. We take a look at other markets outside of the stock market. Then I break down all 11 sectors of the S&P 500 and then compare them with how they're performing with the S&P. We check out some other indexes. We look at correlations between different markets, and then we look at some long-term trends. Finally, at the end, there's a list of those things that are looking positive and those things that are negative currently. First of all, looking at valuation, we are still overvalued. Even after the declines that we saw in April, we're still well above this red dashed line, which is a PE ratio of 20. Not all that surprising. You can see looking back here over history, we tend to be above this red dash line, but that's looking back. This is based on earnings reports that have already been released. To break it out a little bit further, this red line at the bottom is the difference between the S&P and the red dash line. We would have to come all the way down to 4,200 to be considered fairly or not expensive when we're looking at the S&P on a historical basis. This also shows what the valuations have been going back to 1980. Then a variation of the PE ratio was developed by Robert Schiller, where he looks at a smooth take on earnings over a 10-year period of time. We're currently coming in at 35.26. Now, to get some perspective, we can see that in the chart that we're quite high right now. Also, we compare it to the median and the mean, and we're over double what the average price has been over this period of time. So yes, you can say on a historical basis, the S&P is overvalued. But the market looks forward. Since we've been going back up with the S&P, right now we're coming in at 20.5. So we're a little bit over that 20 level. We still use the 10, 15, 20 scale. This purple line up here is the mega cap 8. It's coming in at 24.8. So they're also overvalued. But then we look down at the mid caps and the small caps. They're more fairly priced right now, with the mid caps coming in at 14.8 and the small caps at 14.3. Then, just to get some other perspectives on valuation, we look at the S&P itself, which according to this chart, we're right on, around that 20 level. So we're still at that expensive level. There's areas of the market that are even more expensive, and that would be these areas above the S&P, discretionary, tech, staples, and industrials, and then other areas that are undervalued in relation to the S&P, and then energy is coming in at the very bottom with a PE ratio of 14. Then we look at growth versus value. Now, both growth and value are now in downtrends when we look at them independently. You can see growth is in a downtrend, but it's really been bouncing back. And value is now in a downtrend. It's underneath both the moving averages here. And then we do ratios between the two. We look at growth versus value. And after a really rough April, so far in late April and into May, the market's really staging a nice little comeback. And we're seeing growth really leading up here, even though it's in a downtrend with this ratio. And value is in an uptrend compared to growth, but it's been declining on a ratio basis. We look at a growth ETF and a value ETF and show how growth has been bouncing back lately, how value has been underperforming lately. This also shows growth outperforming, but in a downtrend when compared to value, and where value has really been starting to underperform and still in a downtrend, but we're getting close to a golden cross with this particular ratio. Here's another look at this, showing how we're just barely in an uptrend here, but growth has really been coming back. Then we look at a growth versus value ETF, showing how we're coming back up into the rainbow currently, and values going back down into the rainbow. Sometimes we can get some insight by looking at an inverted version of the same chart because not all the moving averages move the same. Some of the crossovers might be a little bit different from each other. Then we break it out and just look at the small caps. Small cap growth to value just barely hanging on to an uptrend, but showing some improvement lately. Mid caps also barely in an uptrend, but improving. We're in a downtrend with S&P growth to value, but it's really been bouncing back recently. Then we just want to keep an eye on inflation as it relates to commodities. This is a long-term chart, a monthly chart, the CRB index on top. We're coming back down to the red line, which is the moving average, but for the most part, the moving average is still going up. And then we look at a ratio between inflation and deflation. That's still continuing to go down. That means inflation is underperforming deflation. Here's a daily chart of the CRB index, which has been pulling back but still in an uptrend. And then the Baltic Dry Index, still in a downtrend, but starting to bounce back up. And then inflation expectations. This is an ETF that actually trades, where as the market's been bouncing back up, we're seeing a little bit of the inflation expectations ticking up as well, but we're not really breaking out right now. Then we look at a ratio between the inflation expectations that we just looked at with a ratio of tips. These are Treasury inflation protected securities, which when the market's worried about inflation and interest rates, tips usually outperform. We're not really seeing much of a change here with this overall ratio. It's been chopping sideways. Then we keep an eye on aluminum, which is in a downtrend, and corn, which continues to be in an uptrend. Wheat is in a downtrend. Fertilizer coming up a little bit here lately, but not at higher the high levels that we've seen in the past, especially back in 2022. Lumber is in an uptrend, but pulling back. Oil is in a downtrend. We're getting into the high 50s now, where we had been into the 60s. We look at a gold to oil ratio, and this just shows that gold has been outperforming oil. Even though gold's been under pressure lately, oil's been going down too, and that's why this ratio continues to go up. A correlation between oil, which is the red dashed line, and the 10-year yield, pretty strong correlation between the two. They're having a pretty strong tendency to go in the same direction at the same time. So if interest rates are going down, oil now tends to go down. Gas is just hanging on here. It's really chopping around, but barely in a downtrend. Actually, it's a little bit in an uptrend. The blue line's slightly above the red line. And heating oil is in a downtrend. Natural gas still in an uptrend, but really pulling back. Diesel, not really bouncing around all that much. Overall, it has been dropping lately. Copper, which is in an uptrend, and every week when I do this video, I explain this. Copper is a barometer of the economy. And so if copper's looking pretty good, the copper market thinks the economy off into the future is also looking good. Now, it did pull back on the weekly chart, and it's off of its highs here on the daily chart. But when you look at the moving averages, it continues to be in an uptrend. And we look at a copper to gold ratio. When this is going down, that means copper's underperforming, and that's pretty much what's been happening. Even though copper's in an uptrend, gold has been even more powerful in 2025. Long-term chart. Now, usually these tend to go in the same direction. When we have the black line, that's the copper to gold ratio. We have the 2-year yield in green, the 10-year yield in red. And you can see that over history, they haven't gotten too far apart from each other, even though they're on different scales, and they tend to move with each other. But we've been seeing a real disconnect over the last few years. Gold coming off of its highs, but still in an uptrend. Silver also still in an uptrend. We look at the closing price for gold on top, the closing price for silver, and it's pretty just coming out of being neutral, where we saw a bit of a disconnect between gold and silver. Now they're coming back more in line with each other. Then a gold to silver ratio on top. When this is going up, gold is outperforming. When this is going down, silver's outperforming. And then we plot that in the middle area against the US dollar index. And this is it's showing that they were going in opposite directions, but now that correlation is starting to strengthen and they're coming closer into more of a neutral reading right now. The dollar, which has really just been getting hit hard, it fell under 100. Well, this past week, it was able to close back above 100, but it's still in a downtrend. And we compare that with the euro. The euro's been going up as the dollar's been going down. We also look at the Japanese yen, which is in an uptrend compared to the dollar. Here's the euro with the dollar on an individual chart where the euro's in an uptrend. The Japanese yen is also in an uptrend, and the British pound is in an uptrend, all compared to the dollar, as we've seen some real dollar weakness recently. And we look at the S&P 500, that's a weighted index, and we compare it with an equal weight version of the S&P, and they're pretty much going hand in hand with each other. When the bar chart's a little bit above the red line, that just means the S&P is having a tendency to outperform. This also is a ratio between the equal weight and the S&P. When this is going down, the equal weight is underperforming. And most of the time when this ratio is going down, that tends to be positive for the S&P. That means the bigger stocks are taking a leadership role and going up, and then we see this ratio actually going down. We look at the ratio between stocks and commodities. Stocks are underperforming on a trending basis, but they did bounce back this past week. This is showing how commodities had been underperforming stocks, but now they're in an uptrend compared to stocks. We look at the Nasdaq 100 and the S&P 500. When this is going down, that means the S&P is actually outperforming the Nasdaq 100. They both have been bouncing back, but we are showing some improvement with this overall ratio, with the Nasdaq taking leadership. The Nasdaq 100 is growth, and that tends to lead the S&P when we're going up. Unfortunately, it also tends to lead the S&P when we're going down. But this coming back up is rather encouraging, but not enough yet to change the trend of this ratio. The S&P 100 has been underperforming the S&P 500, but bouncing back. The Nasdaq has been underperforming the S&P 500. That's again, a lot of technology, a lot of growth in the Nasdaq, where the S&P is both growth and value together. The Nasdaq 100 is outperforming the Nasdaq itself, which is not what we were seeing back in 2024. It was more of a broad base advance. And when the Nasdaq is outperforming, that's when we see this ratio going down. Well, the Nasdaq 100 is now outperforming, and we're working on an uptrend here. And that could be more positive for the market. That just means the bigger stocks that are growth stocks are taking back their leadership role, and that's continuing. We look at mega caps and compare it to the equal weight, where the mega caps really underperforming, starting to be in a downtrend here, but bouncing back lately. Small caps still just continue to underperform the S&P. We also see that on this chart. The red line is the ratio. The blue line is the S&P itself. Mega caps really getting hit, but bouncing back up. They're in a downtrend. They're trying to come back up to their 200-day moving average. Robotics and AI, and you're going to see a lot of similar charts here. Really falling down, but trying to bounce back up here, and underperforming when we compare it to the tech sector. The Dow Jones Composite Average, which is the Dow, the transports, and the utilities, in a downtrend, coming back a little bit here. The strength that we have been seeing here really has been coming from utilities. The Dow's trying to make a bit of a bounce up lately, and the transports are still weak, but trying to recover. Then we look at a ratio between small caps and tech. Both have been pretty much trending lower as late 2024 into 2025 has been a difficult time for both of these sectors. Then we need to see the semis take more of a leadership role, and they're just not doing that right now. In early 2024, this ratio was really going up, and that was driving the market higher. We topped out over the summer. We were coming down with this ratio. Now, the S&P was still doing okay. It was other areas of the market that were starting to come in and take more of a leadership. Well, in 2025, this ratio continues to go down. We did bounce back up on Friday, but to be more positive, we want to see this ratio going up instead of down, where the semis are actually outperforming tech, and then tech is doing well all by itself. Low volatility stocks continue to be in an uptrend. These are more defensive areas like toilet paper and toothpaste. This is what tends to be favored when the market is getting more defensive. We look at the ratio where the low volatility ETF is outperforming the S&P, but pulling back as stocks are trying to recover. The all world ETF, where you take out US stocks, it's in an uptrend, but it's in a downtrend when we put the US stocks back into the ratio. Energy is back to underperforming in the short term when we compare it to tech, but this ratio is in an uptrend as energy has been going up with tech being under pressure. Then we look at growth stocks and compare them with bonds, where bonds have been one of the better assets in 2025. We're actually in a downtrend here with this ratio, meaning growth is underperforming, but it's trying to bounce back up. Tech sector compared to the 10-year yield, showing that the tech sector is underperforming the 10-year yield. This is an inversion of that same chart showing how the 10-year yield is outperforming the tech sector. Discretionary to staples, showing how discretionary has been underperforming and in a downtrend. This area was really strong for about the second half of 2024. It just really hasn't come to life in 2025. This includes Tesla and Amazon, and we need this sector to do really well to help the market be more positive. Staples, showing here how they're outperforming discretionary. That's when the market's getting more defensive, but lately pulling back with this ratio. Gold, which has been really strong, and now it's starting to come down as the S&P has been going up. So we're seeing this ratio going down, but still this ratio is in a really solid uptrend. Gold's also been outperforming the dollar, but pulling back recently. Now we look at some other stocks. I do show this in the daily video. This is the advanced decline line studies. I measure this whether we're above or below the moving average. And the NYSE common stock, we're back above the moving average. It's a little bit concerning that the moving average is going down, but the longer we stay above this moving average, the more that will turn back up. The S&P's been holding up better. We've been going pretty much sideways with the moving average, and we're above it right now. We're seeing an improvement with the mid caps, and finally the small caps are trying to come above the moving average as well. Then we look at traditional Dow theory, which just looks at the Dow and the transports. I include utilities here, which some folks also use. We're seeing a nice little bounce back with the Dow. The transports have really been weak, but trying to bounce back up here. Utilities have pretty much been going sideways, but seeing a little bit of a bounce up recently as well. And we look at a ratio between the Dow and the transports. This continues to go up, meaning the Dow is outperforming. The transports have been really under pressure, but trying to make a recovery. And we look at a ratio between the Dow transports and the S&P. When this is going down, as it has been, seeing a little bit of a bounce up recently, but this just shows the transports are underperforming the S&P. But the correlation is still pretty strong when we compare the S&P to the Dow transports. And then instead of using traditional Dow theory, this is a new look at Dow theory where we use the S&P instead of the Dow, just trying to bounce back up here. And then instead of using the transports, we use the NASDAQ. That's trying to make a comeback. Then we break that down a little bit further. We look at the equal weight version of the S&P, which is trying to bounce back up, and then an equal weight version of the QQQs, which is also trying to recover. The FANG index is in a downtrend, but ever since we had this death cross, it's really been bouncing back. The Wilshire is in a downtrend. It's above its 50-day moving average, but not back up to its 200. Then the total US stock ETF also in a downtrend, above its 50-day moving average, trying to get back up to the 200-day moving average. ARK is just now starting a downtrend here on the daily side. The NYSE composite, it's been holding up a little bit better, but now it's starting to see a downtrend forming. High leverage loans, this is another barometer of the economy. These are very risky loans, and they got hit with everything else, but now they're really starting to come back and show some improvement. All stocks, which looks at US and international stocks, in a downtrend, but bouncing back up. Emerging markets just starting to go into an uptrend here. It's really hard to see on this chart, but they're actually outperforming a bit. The Japanese Nikkei index still muddled around here, this area that we've been in for 2024 and a lot of 2025, which goes back to the 1989 high. Bitcoin is in a downtrend, but has been bouncing back up. We'll see if it can get back up above 100,000. Microcaps are in a downtrend, but improving. Semiconductors in a downtrend but improving. You're going to hear a lot of that with this. AI and tech ETF in a downtrend but improving. And now we want to keep an eye on this. We look at the S&P and the home builders ETF. We can see that the correlation is really starting to weaken between the two. And sometimes that can not be well for the market if we get a really low reading here. It's not really low right now. It can go a lot lower than where it's at. We just want to keep an eye on this overall ratio. Then we are in uptrends when we look globally. This is using the KST momentum oscillator, where stocks are up in China, emerging markets, Europe, Japan, and the US. And then another global look here. We do a ratio between US stocks and stocks in Europe, Australia, Asia, and the Far East, coming down and actually dropping below the moving average here. And this is a monthly chart, so this is very long term. We really need to see this get back above the red line and start to go up to be positive. However, when we look at the momentum of this ratio, it's continuing to go down and actually dropping below zero. And that could be longer term negative for US stocks. And we look at bonds based on price, where we had been going back up. They fell in Friday's session. We're still in an uptrend though when we look at the total bond ETF, coming back up slightly above the blue line when we look at the monthly chart of the stock to bond ratio. And we're in an uptrend with bonds outperforming stocks, but lately this ratio's been pulling back. And we're just starting to see a new uptrend here with the Pring World Bond Index. High yield corporate bonds, which are junk bonds, they still continue to be in an uptrend. And then more conservative bonds, what we call investment grade bonds, they're just kind of chopping around right now, just trying to hang on to an uptrend. Corporate bonds are also in an uptrend, but just kind of going sideways for most of 2025. We look at a stock to bond correlation, and it's pretty high right now, meaning that if the price of stocks and the price of bonds, they're generally going in the same direction, whether up or down. And we look at a ratio between riskier bonds, junk bonds, conservative bonds, government bonds. When this ratio is going down, that means the riskier bonds are underperforming. Usually it's been more positive recently when this ratio is going up and above the rainbow. It still continues to be below the rainbow, but bonds themselves are doing pretty good in 2025. Government bonds, that is. Then, not really any insight here. I do include these charts in every video just to see if something is happening here. These are Fibonacci retracement levels based on the 10-year yield. We also have a long-term look at the 10-year yield where we've been establishing a higher range now, going back to 2022. Then, same thing here with the 30-year yield with Fibonacci retracement levels. Junk bonds, which really got hit, but they're starting to come back and they are still in an uptrend. And they're outperforming when we compare junk bonds to government bonds. That's when this ratio is going up. Daily chart of yields where they had been coming down, but they did go back up in Friday's session. The employment report was stronger than expected. And so interest rates would had been coming down, which usually are coming down when the economy looks to be weaker. Well, everything changed on Friday, and now the economy is looking a little bit stronger, so interest rates ended up going back up. Then here's a weekly chart looking internationally at US, UK, German, and Japanese rates. And the MOVE index, this measures the volatility of bonds. The VIX measures the volatility of stocks. And then we see that the correlation between the two at the bottom is pretty strong. Things have been quite volatile in 2025. Then we look at some other ratios. The S&P to the 1 to 3 year Treasury bond ETF. Under the rainbow, but improving. And you're going to see a lot of that with these stock to bond ratio studies here. The S&P 1500 improving when compared to 1 to 3 year bonds. Another broad market measure compared to 3 to 7 year bonds is improving after being weak. The tech sector improving when compared to 3 to 7 year bonds. We look at the S&P 500 or the 10-year yield. This shows that the S&P is actually underperforming on a trending basis, but it's trying to bounce back up. Then we look at 3 to 7 year bonds and compare them to stocks. When this is going down, that means bonds are underperforming. Well, we've seen a recent golden cross here with this ratio, but it has been pulling back as stocks have been rebounding. Then we look at a monthly chart of the price of the 30-year bond ETF. We're still under the moving average and declining here. We're flattening out a bit here with the moving average. And we had been positive when we look at the bonds to commodities ratio, but now that's starting to cross over and go negative. Different sectors. First, we look at just the sector by itself, and then we compare it to the S&P. We look at materials, which are in a downtrend, but as things are looking a little possibly better with the economy, materials have been bouncing back up, but they're still underperforming when compared to the S&P. Communication has been a stronger area. It's in an uptrend and really bouncing back lately. This is a growth area. So if you're more positive on the market, you want this area to do well, and it's holding up better when we compare it to the S&P. Energy, which it's been all over the place, but it's in a downtrend. It's been weak lately, and it's actually continuing to underperform. We just had a golden cross here with this ratio, but since then, this ratio has really been showing some weakness as it lately has been underperforming the S&P. Financials, we like that to do well. That just means there's not any great financial crisis around the corner that we can tell as of right now. Coming back and getting back above the 50-day moving average and in an uptrend. And one of the stronger areas when we compare it to the S&P. Industrials also more cyclical or based on what the economy's doing. It's in a downtrend, but it was able to get back above both moving averages. And still in an uptrend when compared to the S&P itself. Then we look at tech, and this is the main growth area of the market, which is in a downtrend but trying to bounce back up, and underperforming when we compare it to the S&P, but trying to improve. We need this to be in a real leadership role if the market's going to be more positive. Staples, more defensive. Toilet paper, toothpaste, still in an uptrend, but chopping along sideways. And it had been outperforming the S&P, but lately has been pulling back. Real estate, which is very interest rate sensitive, in a downtrend, really seeing some weaknesses. Rates were going back up. Well, with interest rates coming down, the real estate sector has been doing better. And it's in an uptrend compared to the S&P itself, but it has been pulling back. Utilities, which have been just chopping along sideways, but still continue to be in an uptrend, and one of the better performing areas when we compare it to the S&P itself, although they have been pulling back recently. And then we look at another ratio. Typically, when this is going up, that means the S&P is outperforming utilities, and that's more positive. When this ratio is going down, that's more negative for the S&P. Then healthcare, another defensive area in a downtrend below both moving averages. And it just generated a golden cross with this ratio, but this is when the S&P was really going down. And now that it's trying to recover, this ratio has been dropping off as well. Discretionary in a downtrend. This was a stronger area back in 2024. It would really help the market if this area could get stronger again. And it's underperforming. The uptrend here, we're just about ready to see a death cross when we compare it to the S&P. Semiconductors, also another huge area when we look at growth in a downtrend, but trying to recover. Then we look at the intermarket analysis chart here, where gold is performing best so far year to date, followed by the price of bonds. The purple line are commodities, the black line are stocks. Then we have the dollar, and then the worst performing asset so far in 2025 is oil. Correlations, pretty strong correlation when we compare the S&P to the dollar. They've been having a pretty strong tendency to go in the same direction at the same time. And then a correlation from the S&P to oil, they're actually having a tendency to go in opposite directions, according to this. So the S&P has been going up as oil has been going down. The S&P to the 10-year yield, also in opposite directions. The S&P has been going up and the 10-year yield has actually been lagging as interest rates have been coming down. And then tech to the 10-year yield, also tendency to go in opposite directions. And then shorter term, we look at stocks to the 2-year yield, coming back up here, but still having a tendency to go in opposite directions. Then we look at some long-term studies. This is the NYSE Composite monthly chart, and this has been holding up better, and we like that we're at the moving average and that the red line is actually going up. But when we look at the momentum, it is starting to roll over. That rollover began at the beginning of 2025. Then we look at the NYSE again. This is a daily chart, and we use the NYSE record high percent index. When this is going up, that's positive. This has been coming down. It's trying to turn back up here, but it's more negative when it declines. And we look at the S&P, which has fallen below the moving average, but trying to come back up. But the momentum is showing some weakness in 2025. And we look at a ratio between stocks and commodities longer term. This is rolling over here, meaning that stocks are starting to underperform commodities on a longer term basis. Then another global look here, when we compare US to global stocks coming down to the moving average. The KST had been positive, but now it's starting to drop below the moving average, and that's longer term negative as well. Then we look through all the positive things here. And those things that are in an uptrend, and that's when the 50 period moving average is above the 200 period moving average. First, we have copper, the euro, the pound, and the yen when compared to the dollar, the CRB index, gold and silver, the low volatility ETF, staples, which is more defensive, and a new addition to the price of bonds is the World Bond Index. That finally switched over positive. But we look at the total bond ETF, high yield bonds, investment grade bonds, and corporate bonds, and then finally junk bonds as well. High leverage loans, that's encouraging from an economic perspective. The NYSE composite, which is just barely hanging on to an uptrend. Emerging markets outside of the US has been outperforming US stocks in 2025. Then the negative side. This is when the 50 period moving average is below the 200. The growth and value indexes are both in downtrends when you look at them by themselves. The mega caps are in a downtrend, as is the dollar, the Dow Jones Composite, which is the Dow, the transports, and the utilities. The FANG index, that's a new addition here to the list since last week. And those are the big stocks. And then the tech sector, semiconductors, whether you look at the SOX index, different indexes, or ETFs, they're all in downtrends right now. That needs to improve for the market to be more positive. And then we look at the Dow, the Nasdaq 100, the Nasdaq mid caps, small caps, and micro caps. Everything, including the S&P, that's not on this list, they're all in downtrends right now. Not a bear market, but they are in downtrends. The Wilshire 5000 and the total US stock ETF, broad market measures, which are in downtrends. ARC, new addition to the list here on the negative side. All stocks are still, they're improving, but still in a downtrend. Bitcoin improving, but in a downtrend. So, thank you. I hope you found this helpful. I hope you're having a great weekend, and I will talk to you in the next video.